Turani, I can look at the quarter gone by and say, okay, it was a miss. But I can also say 3-4 quarters from now, Zomato could be, if they get the strategy right, it could be in a much more dominant position.
Yes, Nikunj, good morning. I think it's very clear that now where we are right now as far as the quick commerce business is concerned, it's a very different game. You have got multiple players, you have got e-commerce players entering the space now. Also, what we have to see that the non-metro markets in the quick commerce business is not doing so well as of now. We have not seen, some very great numbers as far as throughput is concerned, and that also may kind of hamper profitability in the near to medium term. But I think the overall medium to long term prospects of this business, remain to be bright. Zomato has done strong execution versus peers. If you look at even the numbers today, the profitability front, the store front, Blinkit remains to be the market leader despite fierce competition. So we have to give it to the management that execution has been top notch over the last 12 to 18 months. And this may take some time, but eventually they will become winners over the medium to long term.
Having said that, Karan, there's at least quick commerce is becoming a very, very fiercely competitive space. So do you sense that they will have to burn a whole lot of cash before the profitability actually becomes visible?
I think the cash burn is not a question here. The question here is that, Blinkit has always focused on assortment, on user experience, and on trying to basically be better ahead of peers. I think their focus remains to be on that and, not on cash burn. Cash burn can happen. There have been peers who have got, so much of capital they've raised over the last 12 to 18 months. There could be instances of cash burn, but I think that is not the sustainable game here. Quick commerce is a game of convenience. E-commerce is a game wherein the consumer would want the product next day at a lower price. And quick commerce, the consumer would want the premium price product on an impulse basis. So both are very different prospects. E-commerce players are not entering quick commerce to disrupt or to do a price war as of now, as per our assessment. They are entering this space more in the form of experimentation to kind of know in terms of how this market takes off, so that they don't miss out in the future if at all quick commerce were to be a bigger share of the e-commerce market. So I think we have to see these kind of factors here. We don't see like a price war. What we see here is that the reason for the losses coming, or the reason for Blinkit not going to profitability, is one very big reason is the expansion part, because they have to really invest in warehouses, in terms of the store expansion that they're doing. And the second very big reason is the throughput per store. The new stores are not able to generate throughput. These stores could be the same locations that are trying to kind of fortress market in the same locations, get more stores in the same location, or these are stores which could be in the non-metro markets. So these are two monitorables to actually track profitability. But I don't see Blinkit going into a price war as of now.
Karan, the other factor that stood out was when it comes to the food delivery business, there too the margins are under pressure and the management has cited a demand slowdown there.
Food delivery margins have improved actually on a YY basis. They stand to be at about 4.3%. Management has kind of revised their guidance in terms of moving to 5% EBITDA margin as a percentage of GOV. We had anticipated that 5% number could come more closer towards FY27, but I think it's going to come more towards H2 FY26. So food margins have actually done well. They've done well primarily because of platform fee. Platform fee has increased tremendously over the last 12 to 18 months since they announced it in August 2023, I think. And if you look at the other levers as well, if you look at the ad revenue function, if you look at the commission rates, and the margins have kind of done well. Also, what has happened is that there has also been delivery charges which could have kind of come off. There could have been some kind of marketing expenses, promotion expenses also which could have come. So I think margins for the food business remain to be healthy. They have guided for 20% plus GOV in the food business as well, as far as GOV is concerned. So I think there is no issue in the food business. Growth rates are on track. Profitability is on track. The only big monitorable is quick commerce. And I think in the near to medium term, even that should improve as we go ahead.
So at what price point can Zomato becomes a long-term buy? Because at 300, it was trading at a market cap of what? 2.5 lakh crores?
If you look at Zomato in terms of valuations and share price performance, we haven't changed much as far as food is concerned. Our valuation in terms of EV/EBITDA multiple remains to be at 55 times. So there's no change on that. In fact, there's an upgrade in terms of our EBITDA estimates. Of course, some part of that has been offset because of high ESOP charges. But largely, there's a small upgrade as far as food business is concerned. Valuation multiples remain to be same. About 55% of the overall valuation contribution is coming from the food business. So there is good comfort in the food business right now. They are still doing better as compared to peers. In terms of quick commerce, what we have done is that we have kind of revised our valuation multiple downwards. Probably because for the next 3 or 4 quarters, we may see losses in the quick commerce business because of the reasons I just pointed out in terms of expansion and lower throughput in the new stores. Very clearly, over the medium to long term, if execution is on track, you will see multiple revisions therein as well, as far as the quick commerce valuation is concerned. And I think in terms of target price, we have a target price of 300 rupees on the stock. So if the stock falls more from here on, which looks to be, as a high likelihood event, at 200, 220, we would again become buyers on the stock from a medium to long term perspective.
Okay, quite interesting. A buyer at 220 should the stock fall to there, which was, by the way, last Monday's low. But Karan, good to have you on the show as always. Thanks for your time.
If you like this video, then like, share and subscribe to ET Now.